Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries that shape our world. And trust me, this latest filing from Kindly MD Incorporated is quite the rollercoaster. Today we are diving into Kindly MD Incorporated's latest report, a document that tells a story of new debt, old debts being paid off, and some interesting shifts in their leadership. If you love getting the real scoop on what is happening behind the scenes of publicly traded companies, make sure you're subscribed. And hey, if you want to chat about these filings with other enthusiasts, join our Discord community, linked in the description below. So, what is the big news from Kindly MD Incorporated? Well, as of late September 2025, they secured a pretty hefty new loan and simultaneously settled a previous. Significant debt, it is like closing one big chapter and opening another, all within a matter of days. Before we get into the nitty-gritty, let's quickly touch on what Kindly MD Incorporated actually does. They are involved in things like common stock and tradable warrants. Think of it as the basic building blocks of financial instruments that allow companies to raise money and investors to participate in their growth. Their common stock trades under the ticker symbol NACA on the Nasdaq Stock Market LLC, and their warrants are on the OTC Pink Market. This tells us they are a publicly traded entity, and these reports are what they owe the investing public. An interesting note here is that Kindly MD Incorporated still identifies as an emerging growth company. This means they get to follow some slightly less stringent reporting rules, kind of like a probationary period for publicly traded companies. They've also elected not to use the extended transition period for new accounting standards, which means they are keeping up with the pace of financial reporting. Now, let's get to the main event. On the 30th of September 2025, Kindly MD Incorporated, through a subsidiary, entered into a new loan agreement with a company called 2 Prime Lending Limited. This new loan facility is for a massive principal amount of $203,017,500. That is a lot of zeros. The interest rate on this loan is 8.5% per year, and it is due a year later on the 30th of September 2026. The good news for the company is that they can pay this back early without any extra fees or penalties. What is really fascinating about this particular loan is how it is secured. Instead of traditional assets like property or equipment, the loan is backed by Bitcoin or other digital assets. This is a strong indicator of the company's involvement and belief in the digital asset space, and it also highlights the evolving landscape of corporate finance, where digital currencies are becoming collateral. And what did they use this new loan for? Well, on the very same day, the 30th of September 2025, Kindly MD Incorporated completely paid off a previous secured convertible debenture with Yorkville, specifically through Yarthasu PN. Limited, this debenture was originally issued back in May 2025. The company paid a whopping $203 million to settle this obligation. This payment covered the principal, interest, and any redemption premiums, plus some reimbursement for fees to the investor. With this repayment, not only was the debenture agreement terminated, but also all related security documents, and even a registration rights agreement that was put in place in August. This signifies a complete severing of ties regarding that specific financial instrument. It looks like they've used the new loan precisely to eliminate the old debt. Beyond the financial maneuvers, there was also a change in the boardroom. Eric Weiss resigned from the board of directors and a committee focused on nominating and corporate governance. His resignation doesn't seem to stem from any disagreements with the company's operations or policies, which is generally a positive indicator. His departure leaves a single vacancy on the board. In response to this, the board appointed Mark Yusko as the new sole chair of the governance committee and Perianne Boring as a member. Mr. Yusko will be receiving an annual cash fee of $25,000 for his role as chair, which aligns with the company's compensation plan for its non-employee directors. These leadership adjustments are pretty standard for companies as they navigate growth and strategic shifts. To top it all off, on the 3rd of October 2025, Kindly MD Incorporated put out a press release announcing these very events, the new loan and the termination of the old debenture. This is typical practice to inform the public and investors of significant corporate actions. And finally, the report is signed off by David Bailey, the Chief Executive Officer, on the 3rd of October 2025. This signature makes the report official and attests to its accuracy as far as the company knows. So, let S break down what this all means. Kindly MD Incorporated has taken on a substantial amount of new debt, quite possibly to restructure their existing obligations, and perhaps to gain more financial flexibility. The use of Bitcoin as collateral is a bold move, showing a clear embrace of digital assets and suggesting that the company views these assets as stable enough to back significant financial commitments. This could be a strategic advantage if they believe in the future appreciation of these digital assets, or a significant risk if the market experiences volatility. The repayment of the Yorkville debenture is a huge positive. Settling outstanding convertible debt, especially after only a few months, usually means the company believes its stock is undervalued, or it wants to avoid potential dilution from conversion. It cleans up their balance sheet and simplifies their capital structure, which is good for investor confidence. The leadership changes seem to be a natural part of the company, evolution, rather than a sign of trouble. Appointing experienced individuals to key committees is usually a move to strengthen governance and strategic direction. However, the core question remains, is this a sign of strength or a desperate move to stay afloat? Taking on over $200 million in debt, even if secured by volatile assets, is a significant undertaking. The short term of the loan also means they will need to be very mindful of their cash flow and future financing options. The company appears to be betting heavily on the digital asset market, which, while potentially lucrative, carries considerable risk. In conclusion, Kindly MD Incorporated is making dynamic moves. They are deleveraging their balance sheet from one source while taking on new debt from another, all while securing it with digital assets. This points to a company that is actively managing its financial structure and likely has a strong conviction in the digital asset space. The key risks will be the volatility of those digital assets and their ability to manage the repayment of this new substantial loan within its 1 year term. It is a high stakes game they replaying, and we'll be watching closely to see if it pays off. Alright, that is our breakdown of Kindly MD. Incorporated S latest filing, what is your take on these numbers and what they signal for the company? S future, especially their reliance on digital assets. Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to keep the conversation going. Thanks for watching, see you next time.